What a quarter for ON Semiconductor. The company just dropped their Q3 2025 earnings, and there are some major developments that could reshape their trajectory. From groundbreaking new technologies to signs of market recovery, we're breaking down the 10 most important takeaways. Stick around because number 1 reveals why management is more optimistic than they've been in years. Let's dive in, starting at number 10. At number 10, we need to talk about the Nexperia situation. The ongoing supply disruptions at this competitor have created both challenges and opportunities for ON Semi. Management is actively supporting customers who are scrambling for alternative sources, but here's the key insight. Hossein El-Khoury emphasized that inventory levels across the industry remain critically low after 2 years of destocking. Any supply chain disruption will cause chain reactions, and the only real solution is for customers to place backlog with visibility so suppliers can plan accordingly. The restocking cycle everyone's waiting for still hasn't materialized. Number 9 is all about ON's mass market strategy. The company is building die bank inventory specifically to serve their rapidly growing base of small to medium customers. This segment, which represents about 25% of their distribution revenue, has seen customer count increase by 20% year over year. Management is being proactive here, ensuring they have inventory ready for quick-turn orders rather than letting distributors bear all the burden. This positions them perfectly to capture growth as these smaller players scale. At number 8, let's look at the geographic picture. The regional results were mixed but telling. Americas surged 22% sequentially, driven by automotive and aerospace defense applications. Japan jumped 38% on automotive and image sensing strength. However, China declined 7% as macro softness continued. Despite the China headwinds, ON secured critical design wins, including high-voltage traction inverters with leading Tier 1 suppliers, and expanded their position at NEO with both silicon carbide and image sensors. Number 7 focuses on silicon carbide expansion. This technology continues to proliferate across new applications. Beyond traditional battery electric vehicles, ON is now winning designs in plug-in hybrids where silicon carbide historically wasn't used. They're also ramping revenue in AI data centers with their silicon carbide JFET for high-current workloads. The company's 8-inch silicon carbide wafer production remains on track for 2026 at 350-micron thickness, which is best in class. Management emphasized they're gaining share across all major geographies. At number 6, we have a game-changer, the vertical GaN launch. Last week, ON announced their proprietary vertical gallium nitride platform developed in their Syracuse fab. This technology conducts current vertically through the chip rather than laterally, enabling higher voltages, faster switching, and record power density while reducing energy loss by up to 50%. Lead customers in automotive and AI are already sampling the technology, with revenue expected around 2027. This gives ON a differentiated wide bandgap portfolio spanning silicon, silicon carbide, and now vertical GaN. Number 5 is the Core acquisition. ON expanded their analog and mixed signal portfolio by acquiring power technology and IP assets from Aura Semiconductor. This accelerates their roadmap for advanced multi-phase controllers and smart power stages needed for next-generation AI data centers. The products will be integrated into their Trio platform and support both x86 and ARM architectures. Sampling begins this quarter with production in early 2026, giving ON near-term revenue while they integrate the IP into their longer-term Trio roadmap. At number 4, let's talk about the AI revenue milestone. ON expects approximately $250 million in AI-related revenue for 2025, and this business has doubled year over year for 3 consecutive quarters. What's impressive is their comprehensive approach spanning the entire power tree from solar and energy storage through UPS systems and rack-level power supplies all the way to the compute board. Management emphasized that only 2 companies can address the full spectrum from wall to core, and ON is the share gainer of those 2. Number 3 focuses on margins and execution. The company delivered 38% non-GAAP gross margin in Q3, above guidance midpoint, with manufacturing utilization at 74%. They've been disciplined about inventory management, with base inventory at a healthy 112 days, while total inventory actually declined by $39 million during the quarter. Year-to-date free cash flow stands at 21% of revenue, and they've returned over 100% of free cash flow to shareholders through buybacks totaling $925 million. At number 2, market stabilization is the theme. Automotive revenue grew 7% sequentially, and industrial grew 5%, marking a clear inflection from earlier quarters. Management noted they're now seeing seasonal patterns return, which is the first step toward recovery. The bottom was in Q2 for automotive as predicted, and both major end markets are growing in the second half versus the first half of the year, exactly as management forecasted. And finally, at number 1, the strong Q3 results. ON delivered $1.55 billion in revenue and 63 cents earnings per share, both exceeding the midpoint of guidance. All 3 business units showed sequential growth, and the results reflect the strength of their strategy and business model resilience. The Q4 guidance midpoint implies down 1.3% sequentially, which is right in line with normal seasonality of flat to down 2%. This return to predictable seasonal patterns after years of volatility is perhaps the most encouraging signal that the worst is behind them and recovery is beginning. If you found this video helpful, don't forget to like and subscribe for more earnings analysis.